Alright guys, welcome to the first ever backtesting video that I've ever made. One of many. So let's get right into it. This is the world's simplest strategy that anyone with the knowledge of the language that ICD has created can use. Okay, but you have to know the language that he has created first, all the abbreviations and whatnot. So look, first of all, as soon as this SMT was created during January of this year, we were pretty much expecting the bearish price scenario. And the way I like to frame my trades for the upcoming week is I go to the weekly, I go to monthly, but really weekly is where because I would trade week by week, not month by month. So monthly is equally important, but a little bit more important is weekly. But what I see in the weekly is I mark out my previous week high and previous week low and see what is the likely scenario that either side is going to be taken. And this past week, it almost went up to the previous week low, but didn't quite take it out. And this daily CB pushed the price all the way down, where the price went and took out the previous week's low, and then this weekly BC pushed the price high a little bit. So I want to show you the daily chart. This is the 1, 2, 3, 4, 5. These 5 candles are this past week's price action in the daily chart. This was the previous daily low. It took out the daily low, went a little bit below the new week opening gap. This is the new week opening gap, and then it pushed the price up all the way up. Tuesday went all the way up. Wednesday opened all the way up, went into the daily BC, stabbed it, and then it just broke down lower. Thursday, wick down into the new week opening gap, went up, and then Friday was a classic sell day. So let's go what the strategy actually is. So this is the strategy. That's the strategy. So this strategy is called a 1 minute time frame strategy. It's literally that simple. There's literally 2 confluences that you have to point into the charts. The first is a liquidity sweep. So this is the reversal. This is basically a reversal strategy. Let's go 1 minute time frame. Reversal strategy. Okay, 2 confluences are liquidity sweep and SMT. That's it. Once you see them, enter at a first presented fair value gap or inversion fair value gap, whichever comes first or whichever suits best. You're going to see once I go into the charts later. Stop loss right above or below the candle number 1. So if it's long, just below the candle number 1. If it's short, just above the candle number 1. And the target is opposing liquidity. That's it. And backtesting this strategy over the Nasdaq chart this past week, which I'm going to show you, 19 out of 19 trades were winners, most of them being runners. It ran twice or 3 times as much as the opposing liquidity's length. So 19 out of 19 trades that had liquidity sweep and SMT, with the first presented fair value gap being tagged. There were a few with liquidity sweep and SMT, but it did not come back into this. So if you probably put the order, it didn't fill through. So whatever filled, 19 out of them filled, 19 out of 19 were winners. So now let's go into the 1 minute chart. Mad simple strategy that I'm going to show you. So I do not have a subscription to the trading view, so it only gives me a week worth of 1 minute data, so you're gonna have to bear with me, but I will show you nonetheless, don't worry. All right, starting with this right here, the first ever candle that opened at 6 p.m. Eastern Standard Time, New York time. The PDL, previous daily low right here, was taken, came down, went up, opened down, went up, then came down. SMT with the Dow Jones, NQ created lower low, and Dow Jones didn't create lower low, it created high low. That's what SMT is. I hope you know that, guys. And then look, as soon as you see that, boom, you start hunting for first presented fair value gap or IFG. IFG is also here, inversion fair value gap, but let's go with the FVG. Both would be tagged, don't worry. So FVG, as soon as you see that, you enter right here. Stop loss right below that candle number 1. This is 1, 2, 3, third candle. This is the first candle right below the first candle. Opposing liquidity. This is 3.8 risk to reward ratio, guys. Look, 80 points, winner, 21.1 points. That was the potential loss, 3.8. But look what I'm going to show you now. It's beautiful. This total price run was 700 points, guys. If you held on to the trades or put a runner through, put one contract through and let it run, you would have ran 700 plus points. So look, it's respecting the 1 minute BC. That's trade number 1, guys, by the way. Yeah, trade number 1. Another SMT here, look. But after that, we're gonna have a look on the second one. Look, so now it came to the Monday, London kill zone, 3:02 a.m. But this one, even though I showed you SMT, there was a liquidity sweep here, but SMT did not appear there, so you cannot count as the strategy, even though it had exactly the same yield. That's why I annotated this. This is the opposing liquidity. This is the opposing liquidity. The first IFVG or first SIBI, and you can enter, put it right above here. This is 5.8 risk to reward ratio, guys. Look, made simple, 5.8. But since this didn't have SMT, we're gonna leave that behind. Now this one had SMT. Look, SMT with S&P 500. This one had SMT with S&P 500. As soon as you see the SMT, liquidity sweep is obviously 1 liquidity has been swept, 2, 3, and it stepped into the 1 minute suspension block that had already supported price right here. So now when it comes here at 5:46 a.m. with the SMT being shown, you enter into this. Look, this is the first presented fair value gap as a BC. This is 5.54 risk to reward ratio, guys. Opposing liquidity is here, and if you keep a runner, it will keep running. Look, how far did it go? Double, triple. Third one, I'll make it very quick, guys. I'll keep showing you until you are bored or you are excited about testing this strategy yourself. So okay, buy side liquidity taken, SMT seen, CB. You know the reason why I've used this CB, even though it's not after the SMT has been formed, because it's inside of the SMT box. Look, I'm going to show you one thing that will separate you from the normal traders, is that this box right here, this is the box where SMT was present. So if it's inside the box, you can use that as a potential entry point. All right, so I've used that. If it was outside somewhere here, I would have still used it for something else, but not this strategy. It's very simple. So once you see this candle right here, once the price breaks, this candle breaks the price, and this third candle, you can enter, or you can wait, and the price will come back right here and touch your entry a little bit, but you might not get filled because it's very tight. So you can enter right here. This is 5.26 RR. Posing liquidity, boom, tagged. Another one, SMT. Sell side liquidity taken, SMT with S&P 500. First presented inversion fair value gap, boom, stop loss here, opposing liquidity. This is 7.91 risk to reward ratio, guys. 7.91. Sorry. Next, we go into the Asia. So this is Asia. I don't know where you guys are from. Most of you probably are from the States, and you might be sleeping when this happens. But I'm awake here, so I get to see this. So when you see this, buy side is taken, SMT is present. There is the first presented fair value gap. Look, there is the first presented sell side imbalance, buy side sell side imbalance, buy side inefficiency, SIBI. You see that target above stop above first candle, opposing liquidity 11.84 RR, guys. Keep that in mind. As soon as you see SMT, boom, you search for the first presented fair value gap or IFVG. Another one. The sell side liquidity is taken right here and kept going, step right into, what is this? 1 hour bullish order block. So when it steps into the bullish order block and it gives you SMT and then the first presented fair value gap, you enter. This is 5.3 risk to reward ratio, guys. Look, you enter. Opposing liquidity, look. It took quite a while to reach there, but it reached. It reached right here somewhere. Yes, it reached on this candle here. Look, and the price is respecting. Price again stepped right here to this hourly order block. Now 6:20 a.m. came. It gave another entry scenario. Liquidity is taken here because look, this is the London distribution cycle, but this is the 30 minutes of that London distribution cycle. So when it takes the 30-minute out and then another swing low out, and then it gives you SMT inside of the 15-minute order block bodies overlapped with this small BC, boom, you take the trade. Opposing liquidity is right here. You don't need to look further. This might be a less risk to reward, but it's still a trade. 4.31, guys. It's not even a small. Or you could have used this opposing liquidity here. Up to you. And then there came another SMT trade. Look. But I have not put this on because this itself is a parabolic move, because it respected the discount PDA raise multiple times. You could have just entered in this 5 minutes first presented inversion fair value gap as soon as it touched, but there is no retracement towards FVG or IFVG, but it was a good trade if anyone took it. All right, and then it came 9:30. There was another SMT here. See, I haven't used few of these, but they still run, and then look, there it came. This previous daily high was taken here. 9:30 came, it opened up, stabbed into the 1 minute order block buddies, these two, and then went up. Previous daily low was daily high was taken, another swing high taken, and then what did it stab into? Let's see what this is. This is 1 hour bearish order block, guys. Look, 1 hour bearish order block. It stabbed into the bearish order block, hourly bearish order block, SMT, with Dow Jones at 950. Boom. Look, the first presented fair value gap. You could have used this IFVG, but look, either one of them. Stop above the first candle. Risk to reward ratio, opposing liquidity is 7.1, guys. Very high risk to reward ratios for this strategy. Another one, and it kept running and running and running. Look, respected the 15-minute FVG, 15-minute bullish order block, 1 minute first presented fair value gap with nested IFVG. It respected all of them. Kept running, kept running. 10 p.m. comes, previous daily high is taken, major buy side liquidity is taken, and this is just climbing up the daily BC, and then it's disrespecting this bearish order block. So you might be thinking, oh, this is bullish, but no, look. As soon as it's stabbed into this daily bearish suspension block on Tuesday at 2:32 a.m., that's the time of the smart money reversal. Look, as soon as it stabbed into it, and then you saw SMT, because remember, over here there was no SMTs present anywhere, whether it took PDH or BSL. Here no SMT were present, but up here, boom, there is an SMT with ES. First presented fair value gap in the form of IFVG. Boom. Risk to reward ratio right here is 26.9, guys. Are you kidding me? Look. And the funny thing is, it's not even the full. It is not even the full. It's just the Asia low that I have put it as opposing liquidity. You could have just targeted this as opposing liquidity, but this is the Asia low. But look, this run that's gonna happen, that this is the high of that started the run. It is 800 plus points, guys, because this is the high of week, and it's gonna go take out the previous week's low. So this is the catalyst for the 800 points run, if you had a run around. So okay, another one. If you missed this while you were asleep at 2:32 a.m., you wake up at 6 a.m., boom, there's another one. Look, this is the 1 minute inversion fair value gap that it stabbed with SMT present. Buy side liquidity is taken right here. Boom, this is taken, this is taken, this is taken, this is taken, and this is also taken. Multiple buy sides liquidity is taken. Look, and now it stabbed into the IFVG, but it also is stabbed into this suspension block too. This is one of the surest trades that you can have if you frame it. Okay, look, first presented inversion fair value gap, opposing liquidity, boom, 4.97, almost 5 risk to what RR. And then go. Yeah, it goes 800 points, like I said. Sorry, guys. Then comes 9:30 open. Opens up at 9:30, gyrates around, boom, 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 takes this buy side liquidity out, and creates SMT with both Dow Jones and ES. As soon as that happens, look for IFVG or FVG. Boom, that's the first presented IFVG. stop above the first candle or second candle on this matter. Boom, 2.35 risk reward. Not the best, but no, it could have gone more. Could have gone almost 3 or 4, but opposing liquidity is what we have been framing this strategy over. So 2.35. Boom, then comes 2 p.m. Another buy side liquidity taken, buy side taken. Boom, this run took out this PM 30-minute cycle high. SMT was formed at 14.05. First presented IFVG above the first candle is a stop loss. This is 2.64 risk to reward ratio, guys. Opposing liquidity, look, but it runs more, way more. I'm just showing you opposing liquidity, the nearest opposing liquidity. When I say opposing liquidity, I'm talking about the nearest. So the win rate is very high on this. Like I said, this week was 19 out of 19. And I'm gonna keep making these videos, so give me a thumbs up, guys, if you like this. So I'm gonna know to make some, and I'll make some for you guys every week. So give it a thumbs up, like, share, and subscribe. All right, then comes 10:36 p.m. at night. We make SMT. Of course, buy side liquidity are these. This buy side liquidity is taken. This buy side liquidity is taken. This small immediate high is taken, and then you see SMT like this. You watch for IFVG. Boom. Stop loss. Boom. This is 12.8 risk to reward ratio, guys. All right. Next one. All right, another one. At 5:51 a.m. comes. Look what happens here. When it runs up to here, and then it just quickly runs up to get all these buy side liquidities and to stab on the 1 hour CB. As soon as you see the stabbing inside 1 hour CB and the SMT, boom, there is a confluence. FVG, first presented IFVG, sorry. Stop loss, boom. 3.73 risk to reward down to the opposing liquidity. 8, 9. Then it comes 9:30. This major sell side liquidity is taken right at 9:15, or actually no, this candle took out at 9:30. Candle took out because it just made a equal lows. So when this candle was taken at 9:30, I mean when this liquidity was taken at 9:30, and then it came a little bit up, went down, created a SMT with ES. As soon as you see that, and guess what this is, guys? This is 1 hour CB. So 1 hour CB, it just filled the 1 hour CB and then made SMT. First presented. Look, I want to show you one thing right now so you guys have a little bit more insight on this. You know how 9:30 opens, the equity opens, and then there is a big volatility. So your first presented FVG or IFVG might not get filled. So you have to be dynamic on this and chase the second presented FVG. But look, the targets, the stop loss is going to be the same almost, because even though it did not get filled on this BC, your first candle, second candle, third candle. First candle, second candle, third candle, because these three candles created this BC. Your stop would still be under here. Look, even if you had entered, I mean, even if the price came down and you entered, your stop loss would have been just down here by a little bit. So you have to be dynamic like this, guys, around the equity open. You have to be dynamic enough to get these kind of trades. So once you get in, this is 6.04 risk to reward ratio, guys. Look, opposing liquidity, it takes a little bit, but it goes towards the target nonetheless. Then comes, look, then comes 13, which is 3 o'clock, sorry, 15, 3 o'clock, 3 p.m. Buy side liquidity is taken. See the SMT, first presented fair value gap. Risk to reward ratio is 4.13. Boom, look, opposing liquidity right here. Stop loss right above the first candle. 4.3, guys. Have you guys been counting, by the way, how many trades we have been going over? I think it's well above 10, 12. We're almost there, guys, by the way. This is Thursday. Now just Friday is left. Boom. Let's go. Okay. Then comes Friday. A London kill zone. The SMT is created here after the buy side liquidity is taken here. The buy side liquidity is taken, and then the immediate high is also taken, and then you see SMT with these two candles at 4:15. I like the time. By the way, Zusi or Frank 369, huh? He gave quite a good insight on this 369 idea, which I kind of like it. And this time, look, 5 plus 1 is 6, 6 plus 4 is no, sorry, 5 plus 1 is 6. Look, when there is a 369 present on the seconds, you don't need to add minutes. Only if there is no 369 present when you add the seconds, then you can go and add the minute to make it 369. And when that happens, when the number amounts 3 or 6 or 9, that's when the best trades, reversal trades, occur. Go look into your charts. Don't take my word for it, but I'll show you. So look, but now this is, see how I told you got to be a little dynamic. When this SMT occurred, look, that was the first presented fair value gap. No, didn't occur. I mean, didn't get filled through. Second one didn't get filled through. Third one, it filled, but your stop loss would have been right here, yeah? But see how when the first and the second doesn't get filled, I'd like to sit aside and see what the price is doing. But as soon as it went up and closed below this candle, closed below this third, now and then made this another FVG, look, then I'm going to enter in this FVG, and my stop loss is going to be the third candle because SMT is already created here. And this run is so nice, and this run quickly upside only tells me it's trying to rebalance the imbalance and trying to go down. So enter here, 8.26. You'd still be good even if your trade was filled here, because your stop loss would have been on the third candle. I mean the first candle, which is this candle top. So even if you entered here and then stop was up there, 10.83 risk to reward ratio, guys. Yeah, look, more 11.7 risk to reward ratio. Boom. Then comes previous daily low is taken at 6 o'clock in the morning, and then 7, 8, 9 at 9:26 buy side liquidity is taken. Major buy side liquidity is taken, with little buy sides being taken on the way up, and we are expecting the price to go down. This is the 1 hour IFVG, that price is reversing from, a little bit shy of touching the NWOG. It doesn't matter, this 1 hour IFVG is enough for us to frame the trade. Now look, but we're not going to enter here. We're going to wait for SMT. We see the SMT here at 9:45. As soon as you see SMT here, wait for the first presented fair value gap as a SIBI, target all the way up, first candle, boom, 3.33. I like the number, 333 risk to reward ratio, guys. Then comes 10, 11, 12, boom, at 12:20 there's another SMT. But look, just like that other trade, this first CB didn't get filled. If you had the order here, didn't get filled, over here didn't get filled. But don't worry, price comes down, comes up, buy side liquidity is taken, goes down, and then it creates SMT right here. Look, creates SMT with Dow Jones. At 1310, Dow Jones made a higher high compared to Nasdaq. As soon as you see that, boom, wait for first presented fair value gap, target above the candle one high, opposing liquidity, boom, 3.42 risk to reward ratio, guys. All right, and that's the end of the week, and that's all she wrote, guys. I'm sure you've counted the trades. It was right around 19 because I've already counted it before. So this is very simple, guys. I'm going to show you once again. The strategy is very, very simple, guys. Very simple. This is the strategy. Go into the 1 minute time frame. See for liquidity sweep, see for SMT, enter into the FVG or IFVG, stop above or below, candle number 1, candle number 1, target opposing liquidity, boom. All right, guys, I'm gonna see you, or I'm gonna speak to you next time, and until then, good luck with your trading.